Welcome back to Iraqi Dinar Alert, your go-to channel for the latest insights on the dinar. Today, we're tackling the million-dollar question, or maybe the billion-dinar question: is the Iraqi dinar truly undervalued? For years, this idea has sparked intense debate among investors, economists, and online communities. The dream of a massive revaluation has fueled countless theories, but what do the facts on the ground really tell us? Let's dive deep into Iraq's economy, its monetary policies, and the geopolitical landscape to separate the hype from reality. First and foremost, we have to talk about oil. Iraq's economy is overwhelmingly dependent on it. Oil revenue isn't just a part of the budget, it's the lifeblood, making up the vast majority of government income and foreign currency earnings. This creates a huge vulnerability. When global oil prices are high, Iraq's finances look strong. But when prices fall, the country's ability to generate foreign currency plummets. This directly impacts the central bank's power to support the day. This volatility means that simply waiting for a revaluation isn't a viable strategy. For the dinar to truly strengthen in a sustainable way, Iraq needs more than just optimism. It needs deep structural reforms and stable growth in sectors outside of oil. Next up, let's look at inflation and monetary policy. High inflation is a major concern in Iraq because it eats away at people's purchasing power and can hurt real GDP growth. The Central Bank of Iraq, or CBI, is caught in a difficult balancing act, test to control inflation while also making sure there's enough liquidity in the economy to function. But here's a key problem: the CBI doesn't operate in a vacuum. Research shows a significant lack of coordination between Iraq's monetary policy, managed by the central bank, and its fiscal policy, which is controlled by the government. This disconnect weakens the CBI's ability to independently manage the money supply, or make bold moves like a major currency revaluation. So, while low inflation is good for the dinar, systemic economic issues make it a tough goal to achieve without major reforms. Now, let's talk about the exchange rate itself. The dinar doesn't float freely on the open market like the US dollar or the euro. Its value is managed. We've seen the CBI make adjustments over the years. For example, back in December 2020, Iraq devalued the dinar by about 23%. Then, in a reversal, they revalued it slightly in February 2023, strengthening the official rate from 1,450 to 1,310 dinars per US dollar. The story gets even more complicated. Iraq has two exchange rates. There's the official rate used for government transactions and formal channels, and then there's the parallel market rate, often called the black market rate. This second rate is driven by public demand, speculative trading, and the actual availability of US dollars on the street. This dual market system creates massive inefficiencies and opens the door for corruption, as people can profit from the gap between the two rates. Until these two rates converge, the idea of a massive sudden revaluation based on the official rate seems unlikely. The parallel market often gives a more realistic picture of the currency's street value. A central bank's ability to defend its currency depends heavily on its foreign currency reserves. Think of these reserves as the ammunition needed to intervene in the market. Thanks to its oil exports, Iraq has relatively large foreign reserves. However, there are significant constraints on how these reserves can be used. The central bank has to perform a delicate balancing act, managing its dollar auctions to ensure the government can pay its bills, fund imports, and service its debt. The CBI's own governor has pointed out that their decisions are limited by concerns about the country's balance of payments. So, even though some might argue the dinar is being kept artificially weak, the CBI can't just decide to revalue it overnight without risking major economic instability. The reserves are there, but they're already spoken for in many ways. We can't ignore the immense impact of political and geopolitical risk. Iraq's stability is constantly challenged by internal conflicts, governance issues, widespread corruption, and external pressures from neighboring countries and global powers. All of these factors weigh heavily on economic policy and investor confidence. Any regional instability that threatens oil production or export routes would directly undermine the dinar's strength. Furthermore, international institutions like the IMF have been clear in their recommendation. VE repeatedly advised that exchange rate adjustments and other reforms are crucial for Iraq's long-term economic stabilization. With so much political uncertainty, it's difficult for serious long-term investors to feel secure, which makes betting on a revaluation a very risky game. So, where does all the hype about a massive revaluation come from? A lot of it originates from narratives pushed by private investors and speculators. Online forums and social media are filled with stories of people who believe Iraq is on the verge of a sudden, dramatic revaluation that will create instant millionaires. However, credible financial analysts and official sources are far more cautious. The Central Bank of Iraq's primary goal has always been stability, not delivering huge windfalls to currency speculators. Many experts view these investment opportunities with skepticism, and some online communities even warn that these narratives border on scams, promising unrealistic returns. While currency speculation is a legitimate activity, betting everything on a massive revaluation without solid economic signals to back it up is incredibly high risk. So what's the real path to a stronger dinar? It's not a secret lottery ticket. It's through serious, difficult structural reforms. First, Iraq must diversify its economy to reduce its crippling dependence on oil. This means investing in agriculture, industry, and the service sector. Second, it needs to improve its fiscal discipline, ensuring government spending aligns with sustainable revenue, especially when oil prices are low. Third, it has to unify its exchange rates, closing the gap between the official and parallel markets to reduce corruption and increase efficiency. Finally, strengthening institutions is key. A more transparent central bank, better governance, and a firm rule of law would build the confidence needed to attract genuine investment. If these reforms are successful, the dinar could appreciate gradually and sustainably over time. But what could stop this from happening? There are plenty of risks. A sudden crash in global oil prices would be devastating for Iraq's government finances. Renewed political instability or internal conflict could derail any reform efforts. External pressures, like sanctions or regional tensions, could cut off Iraq's access to the global financial system. And if the dinar strengthens too quickly, it could trigger a surge in inflation, hurting everyday consumers. Finally, if the revaluation that speculators are hoping for doesn't happen, a mass exit from the dinar could cause even more volatility. The path forward is filled with potential obstacles. So, let's circle back to our original question. Is the Iraqi dinar undervalued? The answer is a cautious yes, but probably not in the way many speculators hope. The dinar's current low value is a reflection of very real economic risks, policy constraints, and deep-seated political uncertainty. There is certainly potential for the dinar to appreciate, but it's highly unlikely to happen through an overnight, dramatic revaluation. Instead, any meaningful long-term strengthening will depend on the slow and steady progress of structural reform, diversifying the economy, reforming fiscal policy, and building stronger institutions. For anyone watching the dinar, it remains a highly speculative asset. Betting on a revaluation windfall is a gamble. Betting on Iraq's long-term economic reform might be a more realistic play, but it is by no means a risk-free one. Thank you for joining us on Iraqi Dinar Alert. We hope this breakdown gave you a clearer picture of the situation. Don't forget to like, subscribe, and hit that notification bell so you don't miss our next update. We'll see you in the next video.